Welcome to Get Real with Eddie, the show that dives into local, regional, and national real estate, the largest creator of millionaires, and the key to building generational wealth. Hosted by Eddie Rudiger, designated managing broker of Exit Real Estate Specialists. Eddie is here to share expert insights and strategies to help you unlock the power of real estate. Now, let's grow in real estate with Eddie Rudiger.
And here we go. It's time to talk some real estate. Good morning, Nancy. How are you?
Good morning, Eddie.
All right, so it is Fed Day. What do you think? Are we going to cut or no cut?
No cut.
You think it's a no cut?
I think it's a no cut. I think there's going to be some fighting around the table, but I don't think they're going to cut.
So you think, I think, what is it, 9 votes, I think, from the chairs? You think?
Yeah, but not everybody votes.
No, I think there's 9 people that do vote.
Oh, okay. Total of 9.
Yeah.
Okay.
I think.
Because not every...
Back, what was it, before they did the cut, there were like July or something, they had 2, July or August, they had 2 that stood out and said voted for a cut while the other ones voted against. I am going to go in favor of a cut.
How much?
Quarter a point.
A quarter?
I think it's quarter. I don't think you can do more than a quarter, because if you do more than a quarter, you're going to panic the market. If you do a 50 basis point cut, you're going to signal to the market that this economy is way out of line. There's tons of things going on that are wrong. And I don't think there's a ton of things going wrong in this economy. There's some things going right and there's some things going wrong, but I don't think it's, I think a quarter, a half a point, or anything more than a half a point would be a huge red flag for the markets and for everybody, and would freak, it would maybe not be a red flag, it would just freak people out, is what it would do.
Yeah.
And
I don't see the quarter point.
You don't see a quarter point?
I don't see the quarter point.
You think inflation's still too strong? Or what's your reason why? Or you just don't think the Fed's going to do it? You think it should be done or they shouldn't be done?
I think it probably should be done.
Okay.
I think the Fed's going to be, because I feel like job numbers were a little tentative.
Okay.
So I could see them cutting it, but I see them as being very conservative and not moving at all.
Because we didn't get the jobs report.
Right. Because we didn't get an official jobs report.
We didn't get the data, so they don't have the data to hang their hat on. So,
right. They've got other sources that say that it's light manufacturing's down, blah, 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 which I would see as making that cut, but there was no official number, so I think they're going to hold tight a minute.
All right. Well, we're going to know later today, and we'll find out what's going on with that. I sent this article over. Did I send this to you or not?
I don't
know. Economists expect...
You want to share it?
Oh, yeah, I guess I could do that. Let me jump back over to
my
here.
My crystal ball is not working this morning.
Your mental telepathy and reading my mind is not there?
Yeah, it's just not.
Because usually you're pretty good at reading my mind.
That's scary, but yeah.
Well, it's a fun place to be.
No, it's a scary place to be. It's really scary. Scary, folks.
So this is a true story, folks.
I only go with a lifeline.
When I got sick with Guillain-Barré, Nancy took over and was just a huge help with the team and making sure everything was taken care of client-wise. And we had some other agents with us at the time and making sure they were all set. And she started realizing how, like, I would go from one thing to another thing to another thing to another thing and another thing.
It's exhausting being Eddie.
And this is the truth. She called me up while I was still in the hospital. So are you getting out? And this is towards the end, and the medication was starting to work, and I was starting to get some movement back into my legs and things like that. And I said, yes, things are going positive. I'm back up on I'm walking with a walker right now. We're moving in the right direction. And that's exactly what you said. She goes, good, because it's exhausting being Eddie. You need to get out of the hospital.
Well, I said it all in,
it was the most, like, perfect comment for the perfect time, for the perfect moment to make you feel appreciate it, want it, need it, and just to give you motivation to get up out of a hospital bed. Not that being in the hospital itself
isn't enough motivation, but it was just my way of saying we miss you.
If you ever need to get rest and relaxation, it is not, you're not getting rest in a hospital.
Never.
No, it is. I was more exhausted being in the hospital.
Well, that's because they poke and jab and check you 24/7.
Well, and not just that, like towards the end, I was sharing a room.
Oh.
So at first, when I was in step down, because I came in at step down ICU, not in ICU, but step down.
Yeah.
I had my own room.
Yeah.
All right, so I could get a night's sleep. I could get some rest. I could get when they weren't poking, prodding, and checking me. But then you go into your own room. All right. Well, now the poking, and checking went down because I'm not in step down ICU. But now they're bringing in. Oh wait, we got a new person. They're checking them, and he's up all night, and they're leaving the lights on in the room. It's like, oh, this is horrible.
Yeah,
I could not get out fast enough.
I have been very blessed that when I've had my surgeries and stuff, I've always had a private room because I'd be the one that would be up all night and they'd have to be taking care of me. But I'll tell you what, yeah, that'd be brutal.
All right, so getting into some real estate, economists expect a reset for the housing in 2026, not a rebound. So this is David Gallagher. This was written on the 4th of December on Real Estate News. This is a newer website to me I've been using for the last, I want to say 6 months, I think I've been using this. And I get a lot of good insight and good information. David's really kind of been on point with a lot of his stuff.
Okay, so what's the difference between a rebound and a reset?
Well, a rebound is going to be the market coming back in strength. A reset is the dynamics of the market are changing and getting reset. Let's get into what he said. A year ago, economists weren't too far off when it came to their predictions for 2025. 30-year mortgage rates stay above 6%, as most expected, and home sale price growth did slow. Predictions about home sale growth varied as economists were over-optimistic. Depending on how the final weeks of December pencil out, 2025 is shaping up to be either flat or slightly above 2024 in the term of home sales. For 2026, the main theme for the real estate economists' first batch of forecasts is that the housing market should continue to slowly improve for buyers and sellers, even with the persistent economic uncertainty. Buyers are benefiting from more inventory and improved affordability, while sellers are seeing price stability and more consistent demand. Each group should have a bit more breathing in 2026, said Mishka Fisher, chief economist at Zillow. That is a new person. I've never seen that name before.
No.
So no. Zillow got a new economist.
Interesting.
Because I don't remember who the other economist was, but I know it wasn't that. I don't think it was that.
No, I would agree.
So looking into all of this, there's no consensus on home sales. They're saying economists are all over the price with sales predictions. All right. So existing home sales are expected to rise, but by how much depends on who you ask. Existing home sales will rise 3%, bringing an annualized sales rate to 4.2 million, according to Redfin. A 4.3 increase would bring the year's existing home sales total to 4.26 million, according to Zillow. Sales could jump by 9%, which would bring annual sales up to 4.5 million, according to Bright MLS. More optimistic forecasts anticipate existing home sales could rise by 14%, according to NAR.
Yeah. So said Mr. Yoon at the NAR meetings.
I have to be honest. His predictions in these cases have not been spot on.
I gotta say, I don't see it. 14%? I don't see it.
when he makes these predictions, I don't see it either. I think it's going to be between Redfin and Bright. It's going to be a little more than 3%. Maybe Zillow's right on the money at 4.3. I mean, but I could see it being between 4 and 6.
Oh yeah, I think 5 is even aggressive.
Yeah.
I think 2.5, 3.
I think 9.
Much more conservative these days, but
Yeah.
I don't see it. Just to me, 14% is a gully gusher,
Well,
I don't see the faucet opening like
we don't
that.
have December's numbers yet, and I want to see where December's numbers are. Honestly, I want to see where the numbers for December are. I mean, until we get through December and where we're at with December and see how much we're starting inventory with the year at, how much where we're at. You
Yeah.
know, a good year to start off in January is about 1 million units nationally.
Yeah.
All right. Now, if we have 1 million units nationally, there's going to be some people freaking out and saying, we're starting off with 1 million units and this is it. This is the collect. No, that's
Yeah,
where
no.
we're normally starting the year
The
off.
sky is falling
Yeah, we're going to get sky is falling because we haven't started off with 1 million homes in inventory
in years.
So we're going to get sky is falling. There's no doubt about it. But yeah,
But here again, what have we been saying? The market is normalizing.
well, and it's going to depend.
Normal.
And this part of this is, I think, the pressure on why it's going to be a quarter of a point. It's not just the jobs market that's looking weak. It's also the real estate market is looking very, very weak. And when you add those two factors in, I think that's why we're going to get a quarter point Fed rate cut today. When you add in the third, and that's the inflation, while they didn't get the one number, they did get the other number, and it came in at 2.8. And we're going to talk about the 2.8 number because me and you had a phone call conversation about this 2.8 number.
Yes.
So we're going to get back into that in a little bit on that aspect. But,
And I think that's where I think that's where they're going to lock horns in the meeting later today is
well, the
what-
meeting was yesterday. They're just
Or, I
announcing
mean,
it today.
but
yes, I know what you mean.
you know what I'm
Yes,
saying.
Yes.
Where the problem at the meeting is going to be about what's considered normal, and is 3% the new normal?
Yes.
Or is it, or are we still trying to get down to 2%?
And now you're giving away the headline. I said we're going to get into it in a bit. Anyways, we'll get back to that. Mortgage rates are expected to steadily decline, whether they cut the rate today or not. We do have Fed rate cuts coming. With the way the economy is moving,
Oh, yeah.
with the way everything's going, you're going to see the Fed cutting rates moving into 2026. How many
I would
cuts, how deep the cuts, that's all going to be dependent on a lot of different factors. So that's what they're looking at. Home price growth. That's a big aspect too. Most forecasters expect home prices to be mute in 2026. Persistently higher mortgage rates and higher home prices will prevent the median home price sales price from rising more than 1%, according to Redfin. Zillow's got it at 1.2. Realtor.com has got it at 2.2.
Average nationally.
Yes,
The
these are-
CICR's
Yes.
locally being a little more aggressive than that.
9.9%. 0.9, not even 1%. 0.9 is Bright MLS. And 4% by NAR. I think the 4% by NAR nationally, I love the number. I think it would be great. But I think we've got some areas in the country that are hurting pretty bad when it comes to real estate. Arizona, Florida, not sure what's going on in New York, not sure what's going on in California right now.
Well, if we were going to get that 14% more units sold, then I could see it going up 4%.
Yeah, that's true. That's true.
But I don't see either one. Don't see it.
So where do you think it's going to be at? What do you think we're going to get in growth?
Growth
Nationally.
nationally, probably, I'm going to say a little bit more than 1%. I'm going to go 2%.
2%? Mm-hmm. I think 2% growth nationally would be good. What do you think locally?
Locally, 4 or 5.
4 or 5. Yeah, that's where I'm at. So actually, I'm at 4. Because we're going to have some areas that are 3, we're going to have some areas that are 5.
Yeah. So average
Yeah.
4.
Yeah, we're going to have 4. So, 'cause,
I would agree with that.
I mean, I'm seeing a lot of outlying areas that are going to be 1 or 2% growth. It
Oh,
depends
yeah.
on where you're at. So,
Depends on where you're at. Depends on the price point.
yes, that's going to be, and it also depends on what the development is. You know, who's building new housing? Because new housing starts are going to be a key going into 2026, in my opinion. I don't think you're going to get a lot of the freed up inventory in current housing. I think it's going to be from new construction.
Interesting.
So we sat that there's a whole conversation we should have after the break because I went to that housing meeting for the city of Joliet Monday night.
Was it like
That was
Monday night?
It was Monday night.
Monday night.
Yeah, and I'm going to go back. So for those that don't know, City of Joliet's redoing their comprehensive plan. I guess it's been 50 or 60 years since they've done this plan.
Oh,
So they're
probably time.
Finally getting into it, redoing their comprehensive plan. And the idea of the comprehensive plan is to outline and lay out everything that the city wants to do and their goals for the next 30 years. You know, so there's a lot of things that can happen, a lot of things that can be looked
Seems
at.
like a long time for a comprehensive plan, being that growth and the dynamics of
Well,
everything around changes.
You should lay out your comprehensive plan for a 30-year plan, but you should redo your plan every 5 years.
Yeah,
I
I was
mean,
going to say every
let-
3 to 5 years you need to be
I would
updating that
say
plan.
5 to 7, honestly. I don't think you should be doing it. You should be looking at it, touching it every, all the time. I mean, so that it just, there's a lot of things that come in to play. So anyways, getting back into this, with the home prices staying flat, you're looking at the reset. If you got prices staying flat, interest rates slightly coming down, it's going to be a different kind of market next year.
Yeah.
And that market may not be the seller's market we're accustomed to. It may still be a seller's market in our market because of the housing shortages that we have.
Mm-hmm.
But when you look at the national market, you're getting into of a neutral market, maybe a buyer's market in some areas.
Yeah, I would agree.
So, all right, with that being said, the inflation aspect. So this is a conversation me and Nancy got into because we saw, did you send me this article? No, you called me about something and I pulled this article from back in August.
Oh, yeah, we were talking about inflation rates.
And you made the comment that the new rate of inflation, the new set is probably going to be, a lot of economists are starting to say 3% or under is the new benchmark, not the 2%.
Right.
So now keep in mind, folks, this is what economists are saying. This is not what the Fed goal is still 2% or less. But that got me searching and I pulled this article. And this article is pretty intriguing because it laid out what the interest rate was for every year, or what the inflation rate was every year going back to 1929.
Yeah, which was fascinating.
So, because you would think, okay, well, we're going to see a lot of, if 2% is the goal, you're going to see that. All right? And that's not what you see.
It's not what you see at all.
No, it's not. So, inflation rate year over year from previous December. So, it's December to December. Then you had the Fed funds rate at the time, business cycle, okay? And then events affecting inflation. So in 1929, your inflation was 0.6%. There was no Fed funds rate yet. August peak is what it said, business cycle, and then the market crash. All right?
Yep.
Now we get into deflationary issues. So in 1930, it was 6.4% negative on inflation. Again, no Fed funds rate, contraction, and Smoot-Hawley Tariff Act came through.
Yeah.
So the Smoot-Hawley Tariff Act did bring down prices by 6.4%, and going into the next year of 1931, it went down 9.3% of deflation. All right. Contraction again, and that's when also the Dust Bowl began in 1931. So there's a lot of events they put into this. It was actually, I
Yeah.
like this chart and what they did.
Rough.
Yes. 1932, you had another 10.3% deflation. So now we're not inflating, we're deflating.
Yeah, contraction. The market was contracting.
Contracting again. Hoover's tax hikes were the events affecting it, and what was going on. Now, 1933, we finally get some inflation, 0.8%. All right. Contraction ended in March of 1.2%, and this brought in with FDR's New Deal. Got inflation of 1.5%. We got expansion of 10.8%, and U.S. debt rose. All right, in 1934. In 1935, we get inflation of 3%, expansion of 8.9%, and then Social Security also kicked in that year. So, 1.4% inflation in 36, expansion of 12.9%, and then FDR tax hikes came in also. All right. 1938, 7's not on here. Might have got cut off for some reason.
I think it got cut off.
But so we have 38 of negative 2.8, so we have deflation again, contraction ending in June, and then the depression ended in 38. So, at least let's be honest, the depression ended on paper in 38.
Yeah, it took a long time.
Yeah. In 1939, it was flat, zero. No inflation, no deflation, zero. 8% expansion, and the Dust Bowl ended. 1940.7 inflation, expansion of 8.8%. Defense increased. All right, so we get the defense increase in spending because we were leading up to World War II, let's be honest.
Yeah.
1941, 9.9% inflation, expansion of 17.7%, and Pearl Harbor happened. 42, again, 9% inflation, expansion of 18.9%, and defense spending.
Yeah, that's when we were full on. Everybody was working for the war effort.
3% inflation in 43, 17% expansion, defense spending again. In 44, 2.3% inflation, expansion, 7.9%. Brenton Woods Agreement. I don't remember anything about the Brenton Woods Agreement. I don't know what that is. I'll have to look that up later.
Yeah, keep going. I'm going to
2.2% inflation in 45, and then World War II ended in 45. February peak, October through, and that was 1%. In 46, 18.10% inflation. Contraction began again, budgets cuts, so we got into another little bit of a problem. 8.8% inflation in 47, contraction. Cold War spending started, and then we get into 3% inflation in 48. Peaked, November peak. Did you figure out what the Bretton Woods Agreement is?
Yes, it's kind of important too.
Well, okay. Well, I figured they got it notated here. What's the Bretton Woods Agreement? I don't remember that.
The Bretton Woods Agreement was signed in 1944 by 44 countries and established a new economic order to help nations recover from World War II and promote global growth. The agreement created a fixed exchange rate system where currencies were pegged to the U.S. dollar, which was in turn pegged to gold at $35 per ounce. It also established the International Monetary Fund and the World Bank. Real big.
Yeah, that's the World Bank is kind of a big deal. I mean, I'm just saying, whether you like it or not, it's there. So that is kind of big.
It is a big
I'm going to jump ahead and kind of nail out some of these.
That
so
really was the precursor to the modern economic system.
Yeah, it really started the modern system. 1949, it was deflation of 2.1%. 1950, 5.9%. 53.7, 54, negative 0.7. 55.4. So you just keep going back and forth. In 54, the Dow finally returned to the 1929 high. In 1954.
Yeah, 10 years, a decade, or 20 years.
Yeah, almost 20 years. I mean, really?
Yeah.
So it could have been 39, 40, over 20 some odd years.
And it took a war, a major war, because usually wars help the economy.
Well, that's what they say. Is World War II is what got us out of the Great
Yeah.
Recession, our Great Depression. So now you got 0.4, 3, 2.9, 1.8, 1.7, 1.4. These are all inflationary numbers into 1960. All right. So that was the late the 50s, you know.
Then you go through the 60s. It's in the 3s, 4.
Now, here's the thing. 1954. 1954 was the Fed being created and the Fed's fund rate of 1.25%. And that year, inflation was negative 0.7. And in the 50s, Fed's fund rate 2.5, 3%. And you get a 3% to a 3% fund rate. 2.9% inflation, 3% fund rate. 1.8 inflation, 2.5 funds rate. 1.7 inflation, 4% Fed's fund rate. And that year, the Fed raised rates. 1.4, 2% Fed funds rate. A recession began in 1960. 0.7% inflation, 2.25 funds rate. JFK deficit spending ended recession. So deficit spending ended the recession. So 1.3% inflation, 3% funds rate. 1.6 inflation, 3.5% funds rate. 1% inflation. So inflation in the 60s was pretty much under that 2%.
Yeah.
All right.
There was, by the mid 60s, it was into 3 and 4.
Yep. So
Then it went up.
68, we had a 4.7 inflation. Funds rate was 6. You got a 1969 6.2% inflation. Funds rate was 9%. Nixon took office, moon landing. So cycle peaked at 3.1% expansion in 69. 75.6% inflation, 5% Fed funds rate through November, and there was a recession in the 70s. 3.3% inflation in 71, 5% funds rate expansion of 3.3. Wage price controls were put into place.
And you had stagflation.
Yep, we got into stagflation in 72.
It was a hot mess.
Yep. So 6.75, it was 6.9%, 12.3 in 74, 73 was 8.7. We are way over on break. I just noticed that. So let's take a quick break and we're going to get back into this. Keep it here with Get Real with Eddie.
Are you a real estate agent ready to take your career to the next level? Tired of feeling like just another number in the office? It's time to join a brokerage that's invested in you. Exit Real Estate Specialist. At Exit, we don't just offer a desk, we offer growth, mentorship, and the tools you need to build lasting success. Led by Eddie Rudiger, designated managing broker, we focus on helping agents create generational wealth, not just close deals. Imagine having the support of cutting-edge technology, top-tier training, and a culture where your success is celebrated. Plus, with Exit's unique residual income opportunities, you're not just earning commissions, you're building your future. Ready to grow? Ready to thrive? Join Exit Real Estate Specialist today. Call Eddie Rudiger directly at 815-823-5478 or visit www.exitrealestatespecialist.com to learn more. Your future in real estate starts here.
Welcome to the Lions Club. Being a lion means knowing that kindness matters. We believe in changing the world by serving the needs of our local communities. More than 1.4 million lions around the world are responding to local and global challenges with kindness and care. Come volunteer with us. Your Lions journey starts here. The Crest Hill Lions Club invites you to reach out to your local Lions Club to learn about how you can be a part of a community and bringing passionate, kind-hearted people together to serve local needs. They build relationships that lead to opportunities. In short, when lions serve, life improves, and the community grows. Grow with us. The Crest Hill Lions Club would also like to thank our sponsors who help with our yearly events, such as the car show and picnic at St. Joe's Park, and those who attend and support our Easter egg hunts, Shanahan Bingo, and many more events. The Crest Hill Lions Club meets the first and third Thursdays at 6:30 p.m. For more information on being a Lion, go to lionsclub.org to start your journey today. That's lionsclub.org.
It's Eddie Rudiger from Exit Real Estate Specialists.
And Get Real with Eddie. I want to bring to your attention the Herbert Trackman Planetarium at Joliet Junior College. My son loves this. They offer free shows on Tuesdays and Thursdays at 6 p.m. It's perfect for stargazers. The show provides excellent astronomical instruction and entertainment for no charge. That's right, it is free on Tuesdays and Thursdays at 6 p.m. The planetarium features a 30-foot diameter dome, a new OmniStar digital planetarium projector. During the shows, you can enjoy sky tours using the projector and PowerPoint presentations covering a wide range of astronomical topics. For more information, please visit jjc.edu/planetarium. And for you educators out there, they are open for field trip bookings. So go to jjc.edu/planetarium.
Thinking about selling your home? Don't just list it, leverage it with Eddie Rudiger, designated managing broker of Exit Real Estate Specialists. Eddie puts powerful marketing strategy behind every sale, featuring professional photography, detailed floor plans, immersive 3D virtual tours, and dynamic video walkthroughs that make your home stand out. With targeting online campaigns, social media exposure, and proven strategies, Eddie attracts serious buyers to get your home sold fast and for top dollar. Plus, you'll always be in the loop with clear, constant communication. Ready to sell with confidence? Call Eddie Rudiger at 815-823-5478. That's 815-823-5478. Or visit yourdwellings.com. Eddie Rudiger, Strategic Marketing. Stand out results. 815-823-5478. Or visit yourdwellings.com today.
Doing everything for you except the moving, and be glad. It's Get Real with Eddie.
All right, still going through this chart on inflation and everything over year. This is just very, I know it sounds boring looking at these numbers, but 4.9% in 76, 6.7, 9 and 78, 13.3. 80s, you get a 8.9. So 8.9 inflation in 81. In 79, it was, so the inflation came building up into the early 80s. 6.7, 77. 9 in 78. The fund rate was 10. 79, 13.3 inflation. Funds rate was 12. 8.9 in 81. 12% inflation, or funds rate. And 81, the Reagan tax cut happened. All right. Inflation in 82 went down to 3.8. Funds rate went down to 8.5. We had contraction of 1.8, and the recession ended. 3.8% in 83. Funds rate went up to 9.25, but we had expansion of the market by 4.6%, and there was military spending was part of that. You had 3.9 and 3.8, 84, 85. I lost my place. Wow, I jumped really back.
Yeah.
I don't know how
There
I
you
did
go.
that. There we go. 86, 1.1%, 4.4, 4.4, 4.6 and 89. Look at the funds rate on how high. Those were when we had those high interest rates. So Black Monday crash of 87, I remember that.
Boy, do I remember that.
6.1, 7% funds rate in 90. Inflation was 3.1, 2.9, 2.7 in 93, 2.7 in 94. But you look where the Fed's rate is all of these years. And then you get into that late 90s. 97, 1.7 inflation, 1.6 in 98, 2.7, 99, 3.4 in 2000, 1.6, 2.4, 1.9, 3.3, 3.4, 2.5, 4.1, 2010, 1.5, 3 and 11, 1.7, 12, 1.5. These are the inflation numbers, all right? And then in the last kind of like 10 years, 1.5, 0.8, 0.7. This is coming out of the Great Recession, though.
Yeah.
All right. 2.1, 1.9, 2.3, 1.4, 2021. So this is, now we're getting post-COVID. 2021, 7% inflation. And this, I don't know what the next numbers were because they got cut off. 2024 was 2.9.
Yeah.
I think we all know what 2022 and 2023 is. The point, we write all of these boring numbers off for you guys, is the fact that Nancy brought up a great point. Maybe 2% isn't the magical number we need to be targeting, because when you look at what the inflation rate has been historically since 1929, it has not averaged out. And it's usually not under 3%. It's usually not under 2%. It was really only under 2% for the last maybe 10 or 15 years, and that was because we were coming off the Great Recession.
Yeah. So really, is 3%
The new normal?
the new normal?
Or a better target, at least. I mean, I don't think it really matters. I saw somebody talking about online, that we need a deflationary. We need it to be negative. And I'm like, yeah, you don't want that.
No.
Because now you start getting into negative numbers. Now you're going to see unemployment. Now you're going to see people losing jobs.
Well, you want to make sure that people's, okay, 2, 3, 8, whatever it is, the whole point is that people's income needs to keep up with it.
Yes.
And if it's too aggressively high, then people aren't going to be able to keep up with it, and that's when we run into problems.
And I think that's the true aspect of this, is we don't have that number, is what was wage growth? What was the average wage growth at the same token of the inflation? So like last inflationary number was 2.8, and I think the wage growth was 3.8 or 3.9. So you've got...
Is it that high?
Yeah.
I didn't think it was that high.
So when you see the wage growth, this wasn't off the number that was just announced. This was off of the last actual data report that came from the government, that they had put together prior to the shutdown. So I think it was October numbers is what it was, whatever the last set of numbers we got.
Was it September?
It might have been September, because I think
announced in October.
Announced October. Yes, that makes sense. Because we're waiting on October and November numbers. It's not that we're not going to get them. We're just going to get them together, and those get announced later in December after this meeting that's happening today, where the Fed's going to make a decision if they're going to cut rates, and they usually like to have the data.
And that's why I don't think they're going to cut rates.
We'll see.
We'll see. I mean, they may just go ahead and do it. There's a lot of pressure to just do it. So, and what sales are looking like right now during the holidays and all that, that's going to make a difference too. So
That's true. I haven't seen any kind of sales data. I've seen some stuff.
Zero sales data.
Yeah, I've not seen much. I heard some stuff that Black Friday was up and consumers are spending more, but I'm not 100%.
I didn't even hear that.
Yeah, I have. I've seen a couple things, but honestly, I haven't been paying attention to that, just because I've been running around the last couple days working my kids' school.
Yeah.
Let me tell you, the kid spent tons of money at school at the little Christmas shop. So actually, he did really good. We gave him
buying books at their little book
he bought
thing
the books,
at preschool.
Yeah, so. He bought the books at the book fair too. So
yeah, we get a book fair too. It starts when they're 3.
Mm-hmm. So, all right. Let's do this, and then we're gonna hit a break, and that is 3806 Brenton Drive. This is the tri-level in Joliet that is in Plainfield School District that feeds into Plainfield Central, is on the market for $375,000. This is a 4-bedroom, 2-bath home, tri-level with a 2-car garage on a corner lot. That is up for $375,000. It's 3806 Brenton Drive, Joliet, Illinois. Great lot, great space, no HOA fees. or any kind of like extra restrictions, it's just under, it's 0.24 of an acre. So it's just under a quarter acre lot. The house is 1948 square feet, not counting the lower level. So you're in almost just under 3,000 square feet. It's like 2,900 when you count up everything finished space.
Yeah, that's a lot of room.
That's a lot of space. It's a really nice setup. You walk in, you've got living room and kitchen on the main level. Up are 3 bedrooms and a bath. Down is family room, bedroom, and a bath. So, I mean, there's a lot of good space. Wonderful little side door out to a little paver patio that's set up just on the outside there. And like I said, it's a nice corner in fenced in lot too. So 3806 Brenton Drive, it could be yours for the new year. Give me a call, 815-823-5478. When we get back after the break, I want to finish up with the suburb that was named the biggest boomtown in Illinois.
What do you think it is?
I know what it is. I'll tell you after the break. Keep it here with Get Real with Eddie.
Are you a real estate agent ready to take your career to the next level? Tired of feeling like just another number in the office? It's time to join a brokerage that's invested in you. Exit Real Estate Specialist. At Exit, we don't just offer a desk, we offer growth, mentorship, and the tools you need to build lasting success. Led by Eddie Rudiger, designated managing broker, we focus on helping agents create generational wealth, not just close deals. Imagine having the support of cutting-edge technology, top-tier training, and a culture where your success is celebrated. Plus, with Exit's unique residual income opportunities, you're not just earning commissions, you're building your future. Ready to grow? Ready to thrive? Join Exit Real Estate Specialist today. Call Eddie Rudiger directly at 815-823-5478 or visit www.exitrealestatespecialist.com to learn more. Your future in real estate starts here.
Welcome to the Lions Club. Being a lion means knowing that kindness matters. We believe in changing the world by serving the needs of our local communities. More than 1.4 million lions around the world are responding to local and global challenges with kindness and care. Come volunteer with us. Your Lions journey starts here. The Crest Hill Lions Club invites you to reach out to your local Lions Club to learn about how you can be a part of a community and bringing passionate, kind-hearted people together to serve local needs. They build relationships that lead to opportunities. In short, when lions serve, life improves, and the community grows. Grow with us. The Crest Hill Lions Club would also like to thank our sponsors who help with our yearly events, such as the car show and picnic at St. Joe's Park, and those who attend and support our Easter egg hunts, Shanahan Bingo, and many more events. The Crest Hill Lions Club meets the first and third Thursdays at 6:30 p.m. For more information on being a lion, go to lionsclub.org to start your journey today. That's lionsclub.org.
It's Eddie Rudiger from Exit Real Estate Specialists.
And Get Real with Eddie. I want to bring to your attention the Herbert Trackman Planetarium at Joliet Junior College. My son loves this. They offer free shows on Tuesdays and Thursdays at 6 p.m. It's perfect for stargazers. The show provides excellent astronomical instruction and entertainment for no charge. That's right, it is free on Tuesdays and Thursdays at 6 p.m. The planetarium features a 30-foot diameter dome, a new OmniStar digital planetarium projector. During the shows, you can enjoy sky tours using the projector and PowerPoint presentations covering a wide range of astronomical topics. For more information, please visit jjc.edu/planetarium. And for you educators out there, they are open for field trip bookings. So go to jjc.edu/planetarium.
Thinking about selling your home? Don't just list it, leverage it with Eddie Rudiger, designated managing broker of Exit Real Estate Specialists. Eddie puts powerful marketing strategy behind every sale, featuring professional photography, detailed floor plans, immersive 3D virtual tours, and dynamic video walkthroughs that make your home stand out. With targeting online campaigns, social media exposure, and proven strategies, Eddie attracts serious buyers to get your home sold fast and for top dollar. Plus, you'll always be in the loop with clear, constant communication. Ready to sell with confidence? Call Eddie Rudiger at 815-823-5478. That's 815-823-5478 or visit yourdwellings.com. Eddie Rudiger, Strategic Marketing. Stand out results. 815-823-5478 or visit yourdwellings.com today.
You made a smart move to get real with Eddie, helping you make your next smart move into your next home.
All right, so the Village is one of the country's 49 boomtowns, which are seeing positive economic activity and population growth.
And it's my hometown.
Well, that just gave it away.
And maybe people don't know what my hometown is.
I think everybody knows your hometown. That's right. Plainfield is the number one boomtown in Illinois. If you did not see this, this was on the patch. Emily Roska wrote this article, and it was really well done, talking about Go Bank rates determine the most cost living in Plainfield is $4,226. The monthly mortgage costs $2,210. The household median income is $143,064. So this is the number one boomtown in the country. Population is up by 9.6% since 2014. Change in capita income is up 32.6%. I don't know from when. It just says up 32.6%.
Yeah, I don't know when they base this.
Yeah. Change in occupied housing units is 1,946, up 14%. And change in owner-occupied housing units is up 17.8%. So when you look at the numbers, Plainfield is growing.
Again.
Mm-hmm.
Still. It's I mean, back in the early 2000s, it grew by like 300%.
Oh, I remember that.
It couldn't have grown faster.
The school district was struggling to keep up.
Oh, they were,
Because
everything was struggling to keep up.
They
Were
could-
growing so quickly.
They could build the buildings, but they couldn't hire the teachers fast enough.
Yeah.
And they couldn't get the infrastructure in place to support the teachers, to support everything.
Right,
So
fast
they have all those pieces expanding outward.
Yeah.
It was a little chaotic.
It was huge.
Yeah,
It was
so-
huge. It was so much growth. But then the Great Recession came and screeched everything to a halt. But Plainfield stayed steady and worked their way out of it.
I just had a listing that was listed Plainfield mailing, Plainfield Schools. Now it was City of Joliet, but it went under in like 10 days, just because that mailing address was Plainfield. You got that mailing address Plainfield, whether you're in Plainfield or not. I think it makes a huge difference.
That's why they did it the way they did
You
it.
could do Plainfield Schools, and he had Joliet mailing address, and those properties could struggle and stay on the market. It's a little bit tougher to sell those, even though both houses are in the City of Joliet.
Yeah.
I don't think it had anything the way they did it. It was what the post office decided to do.
Well, it was all, back in the day, it was all Plainfield Township. That's how, so all the mailing, that's how it was all numbered and arranged, was because that was all Plainfield Township out there.
So yeah,
All of it.
so they were unincorporated Plainfield.
Right.
And when they went incorporated, it wasn't Plainfield that incorporated them in, it was Joliet.
Correct. But the mailing addresses
Stayed the same.
Stayed the same.
Because one beautiful thing about Illinois is we have a layer of government for every single thing that we do.
And so that's how it got to be.
One government, which is the post office, decides your mailing address, and the government that's your actual city that incorporates you is another.
And that's why it got what you hate.
Oh, I hate it. Don't say it. Don't say it. Okay. Say it.
Joe Field.
Yes, it got dubbed Joe Field. So now you know the trick to tell if it's Joliet or Plainfield, right? There's a couple.
I was going to say, well, when you call the police station and we tell you you're not Plainfield, that's one
That's
way.
one. Yeah, that's true.
One way.
That's one way. That's true.
one way.
Your water bill's another indicator.
Yes.
If you're getting water from Joliet and you live in Joliet, most likely.
Yeah.
Actually, A few years ago, I want to say maybe 15 years ago at this point, probably. Plainfield went on to the Chicago grid system, and they went to a
Went to the 5-digit.
Yes, you were in 911 at the time, and it was a nightmare, wasn't it?
It was a nightmare.
Yeah.
It was horrible.
Yes. But that's how you tell Plainfield versus either unincorporated Plainfield or Joliet.
Yes.
Because unincorporated Plainfield and Joliet still have 4 digits in a lot of their
Have the
numeric.
3 and 4 digit
Yes,
numbers.
where
Yes.
Plainfield has 5.
Yes. And why?
I don't know.
Why?
It wasn't my decision. I had nothing to do with it.
I
was told it was because of 911 operating. Something to do with 911. But then I'm like, well, why isn't Joliet moved? Well, Joliet's got their own 911 system, but...
Well, it's the way that the 911 call comes in probably has to do with the grid.
Yes.
But Joliet works the same grid as we do, so I'm not quite sure.
I don't know.
Maybe they just decided to make it that way. I don't know. We all complained because it was really confusing.
Yeah. No, absolutely.
And that was back in the day before we had computers, so we had to learn the new addresses, and it was a struggle.
So that's the trick is if it's true Plainfield, it's going to have 5 digits.
Yes.
And if it's not, it's going to be a 4-digit. The other aspect, too, is the zip code. A lot of the Joliet homes that are not Plainfield, not all, because there are some that are in 60586 that are Plainfield Village, some.
I was going to say, 60586, and they're in Plainfield proper?
Yes, most of them are Joliet. Yes.
I'd have to see where that is at.
That is really after you go down Drowden and you get across the train tracks.
That's what I was wondering, if it was Drowden.
And you get across the train tracks and those new developments, Springbank and all of that by Lennar.
Yeah.
Those are actually incorporated to Plainfield.
Yeah.
Those are Plainfield.
They are very much outliers.
Yes, they are. Yes. They are also Plainfield Central School, last I knew. Now, there has not been a big talk, but there's been a little bit of redistricting in the high school map.
Oh, there's been a lot of redistricting with the elementary schools.
Yeah. Yeah. So all of that and where they feed into, all of that comes into play
They're
lot.
Doing a huge shuffle right now.
Mm-hmm. So there's tons of stuff going. But hey, you know what? They're the number 1 booming town according to Bankrate. So
well, they're 49th in the country.
12th place out of 49 total states.
Yeah, number
examined.
1 in Illinois.
Yep.
And 49th.
No, 12th out of 49.
Oh, 12 out of 49.
Yeah, according to Go Bankrate. So
in the country.
Go banking rates is what it is. I'm sorry, not go bank rate. Go banking rates.
Yes.
So some pretty good stats, though. I mean, you can't go wrong. 32% increase, 0.6 increase per capita income.
Plainfield's come a long way from that little
farm town.
Corn
growing
farm town when I was a kid.
It's come a long way since I graduated. I mean, I was the tornado generation. So from where it was pre-tornado to post-tornado, and a lot of people think this development was all because of the tornado. It wasn't. It was already in place. It was coming. We just happened to get it. We just happened to get a tornado that came through that kind of put a flag in a point in history.
Yeah, so it was already developing. Plainfield was really moving along at that point.
Mm-hmm. Well, you had a change in mayor, and you had a change in status, and you had a change in the board, and they went from trying to be where I remember they wouldn't even allow McDonald's into now. You've got tons of corporate.
Well, they really pushed to maintain that little small town atmosphere, much to their detriment. I mean, look at what they gave up, like the mall.
Yeah.
And stuff.
Yep.
All that.
Yep.
They chose not to annex all that.
Yep, that's true. All right, well, that wraps it up for Get Real with Eddie. Don't forget, check us out online 24 hours a day, 7 days a week at GetRealWithEddie.com. That's getrealwitheddie.com. 24 hours a day, 7 days a week, talking about your largest investment, your home.
Thanks for listening to Get Real with Eddie. The views and opinions expressed are those of the host and guests and do not constitute legal, financial, or real estate advice. Listeners should consult appropriate professionals regarding their individual circumstances. Eddie Rudiger and affiliated parties are not liable for actions taken based on this content. Eddie Rudiger is the designated managing broker of Exit Real Estate Specialist, Illinois license number 481-014247, located at 2405 Essington Road, Uden I, Joliet, Illinois 60435. Exit Real Estate Specialists is an equal housing opportunity provider. Each Exit office is independently owned and operated. To join an Exit office, call Eddie at 815-823-5478.